What's up, guys? There is a huge update on the IRS website. Track this all the time. Just came out, 4 big updates, but the one I'm going to talk about right now, the deduction for seniors, where this literally, between this and your other new standard deductions are giving you, I'm going to show you an example how somebody making over $100,000 is not going to pay any tax, essentially, on their Social Security. So Trump campaign on no tax on Social Security, essentially getting there with these extra deductions that are coming out. I'm going to show you that right now. But first, let's look at this. So the new deduction for seniors is effective through January 2025 through January 2028. And that's anybody who's turning, all you got to do is be turning 65 this year. So it's going to be December 31st, guys. As long as you're turning 65 this year, then you get this extra $6,000 deduction. And if you're married and you're both 65 by the end of the year, you get $12,000 extra on top of your normal standard deduction. So normal standard deduction for filing single is $15,750. Filing joint, it's $31,500. So if you take that, add on top another $12,000 on top of that, we're talking over $43,000. Then don't forget, filing individually over 65, you get an extra $2,000 on top of that. If you're married, you get $1,600 per person. That's another $32,000. So we're literally at $46,000 standard deduction for people over 65 between now and 2028. All right, so you got to talk to your financial planner about this, or CPA, and how to structure income. Or virtually making over 100K, you may not have to pay any tax at all. I'm going to show you an example right now. And by the way, if it's your first time watching, my name is Bill Wilkins, certified financial planner. Been doing this for over 30 years. If you want access to this software that I'm going to show you, which is the #1 ranked financial planning software in the country, as ranked by the T3 Insider Information Advisor Software Survey, it's called Right Capital. If you want access to this, email us at william.wilkins@lpl.com. It'll be down in the comments section as well, the information area. Email us. We'll send you the link. Feel free to use it. If you want us to help you, walk you through it, we can talk about a discovery call, what you're trying to do, and see what we can do. But anyway, let's get back into it. This is one of the sections of the software that we get into is tax planning. So it's one of the big, huge things. There's 8 key areas we talk about, but tax planning is huge. It's your largest expense typically you're going to run into your entire life. So planning-wise, if you do this correctly, it can save you dramatically. So this is a hypothetical 2025 tax return. And what's cool about this, I can actually change this to any future tax returns based on current tax law. And it automatically switches to that year, and we can look at what your tax return could look like 2, 3, 5, 10, 20 years in the future based on current stuff. But anyway, 2025. So this is an example of a couple. They had $85,000 in Social Security, which is basically the max you can get. You can't really get any more than that. It's about $4,000 a month that you can tap into. And I don't know a lot of people that have tapped into that much on the caps. They had some qualified dividends from stocks. They had some interest from bank accounts, ordinary dividends. They had some taxable distributions from their 401k or their IRA in this case. Could have been doing Roth conversions. This just happened to be, hey, we want some extra money because we're 65, want to spend it down before, God forbid, something happens to us. And then if we look at this, this is key. Social Security benefits, $85,000. Well, guess what? There's a calculation that's done where you take half of your Social Security, add in your other income, come up with this combined income, provisional income, and then it shows you what your taxable portion of that Social Security is, and this happens to be $23,000. So you had over $85,000 in Social Security, but if structured correctly in other income, barely any of that is taxed. So they also had some capital gains here, about $2,700. Let's blow this up a little bit more so you can see this. So again, here's the Social Security, the taxable portion, some capital gains. Then we get the line 9. This is your total income. So they had over $100,000. So you take 85 plus 15 plus this 3,000, $4,000, $5,000 here. You're talking about over 100 grand in income, but their only total income that's going to be potential coming in for taxation is 46,000. So you remember that number I showed you before or talked about? There's going to be a standard deduction for seniors, literally at about 46,000 plus. Under the old tax law, you still would have had like 12, 13 grand taxable. In the new tax law, this is essentially completely wiped out, where this line 18 total tax or line 16 would essentially be zero in this situation. And that's what I'm talking about, doing good tax planning, financial planning, to see if we can strive and help you live the lifestyle you desire with the least risk possible. If you want us to talk to you, drop us an email, send us an email, william.wilkins@lpl.com. It's down in the comment notes section. Be glad to talk to you about things. And again, if you want that complimentary software, let us know. Have a great rest of your day. Thank you.